Do you know what I think actually we'll see happen is this interesting opposite of a shit sandwich, which is I think you'll see massive churn at the 2 billion plus level in your large mega funds. The LPs realize that bluntly, you need to return so much. What it takes to make those economics work is impossible or near impossible.
Yes.
And then actually this desire to consolidate managers and move away from the really early, less experienced emerging managers under 100 million who don't have DPI. And I think the ones that actually win are the ones in the middle at the 250 to 750, where they do have DPI, they do have track, but they're small enough fund sizes where you can still see real upside.
You know what I think, and again, I can only share what I've learned. I'm not as much of an expert here as you. But the other thing that some of these top LPs said to me is they challenged that a little bit. We had that conversation, and what they said is, yes, for traditional LPs managing a certain amount of capital, that makes sense. Okay, that's we're gonna revert more to a classic type of investing, right? Where large funds are tough to make work, and it's way too much energy to work with emerging managers. Way too much energy for not enough absolute return, right? We're back in the world, but the massive pools of capital, right? The massive government level pools of capital, even the big funds are optimized to produce a return for sovereign wealth funds. Sovereign wealth funds still have single digit returns. If you look at them, it is so hard to deploy that capital. And if an Andreessen or Sequoia and Bessemer and Lightspeed you think you have to have alpha to NASDAQ, but it's not that simple, right? If you can have alpha to their endowment and absorb $500 million a year, that's better than a lot of the things. It's just these massive. And so that's why they're all going to Abu Dhabi or Dubai, and they're all chasing these funds. And it's not as silly as it sounds, because the amount of capital they have to deploy is it's so large you can't even imagine. Even GIC in Singapore, it's so much money, right?
I agree. I had a number that's actually 3 trillion in the next 6 years.
Yes.
Across
so that's why Twitter's a little bit wrong. Those guys you can't make money. Yeah, you can do okay in T-bills today, and in all fairness, but even that, you can only buy so many T-bills as a sovereign wealth company. You can't become part of the United States. And so that's what these multi-billion-dollar funds are optimized around sovereign wealth type. They're not all sovereign wealth, but they're optimized around this. They're all products, right? Everything in VC that's been around a while is a product, right? Those products, I suspect, if they can return 10% a year reliably for real and absorb massive amounts of capital, they will be able to continually raise multi-billion-dollar funds, right?
100%. And to your point on different people playing different games, a lot of people say with the large funds, they've got a lot of churn in their LP base. In the majority of cases, they don't actually care, because it's a deliberate graduation from one LP class to another. From your endowment style riding 20 to 50 million to your sovereign wealth riding 250 to 500 and your pension funds in that realm. And so it's changing the game that they play and changing the LP profile that sits with that game.
I think you just got to be careful on Twitter. A lot of people are grouching about the old times, but the times change, right?
No,
but the pools of capital, the amount of capital, I guess the last point is just the amount of capital, even with some valuation compression that we've seen in multiples, the amount of capital that startups can absorb pre-IPO still is large, right? The amount of money that's going to go into venture is equal to the amount of money startups can absorb pre-IPO, right? And even if it's gotten harder, if companies can IPO at a $5 billion, $6 billion valuation and a few higher, they're going to absorb half of that in capital, 20% of that in capital. They're all going to absorb it. One way or another, it's going to get absorbed, right? It's going to flow there.